Hey, what's up everybody? Let's be real. For a lot of us the whole investing thing can feel pretty overwhelming. Whether you have $100, $1,000 or even $10,000, the truth is, you can start growing your money right now. You don't need to be rich to invest smart. In this video, I'm breaking it all down step by step. We're going to dive deep into how to invest at 3 different levels, $100, $1,000 and $10,000, and the strategies that give you the best chance at maximum returns over time. I'm talking about the exact investments you can make right now, no matter where you're starting from. Make sure to like, subscribe, and turn on notifications, so your money never sleeps. Let's get this money, guys. Alright, so you've got $100. First off, that's awesome. A lot of people think $100 isn't enough to get started, but trust me, it's the perfect launching pad for building some serious long-term wealth. Remember, every journey starts with a single step. And in this case, that step is turning that $100 into something more. Now, how do you actually do that? Well, one of the easiest and most effective ways is to jump into the stock market. Don't worry, you don't need to be some kind of Wall Street hotshot. Apps like Robinhood, Fidelity, or M1 Finance let you buy something called fractional shares. Think of it like buying slices of a pizza instead of the whole pie. With fractional shares, you can buy into low-cost index funds, even if you don't have thousands of dollars lying around. A great option is the S&P 500, which you can invest in through ETFs like VOO or SPY. Why the S&P 500? Because it tracks the performance of 500 of the biggest companies in the US, so you're instantly diversified and exposed to the entire market. That's the beauty of index funds. They spread your money across hundreds of stocks, reducing your risk. Now maybe you're thinking, the stock market seems a bit risky for me right now. Totally get it. If you're more risk-averse or saving for something in the short term, there are other great options. Consider parking that $100 in a high-yield savings account or a certificate of deposit, also known as a CD. These aren't going to make you rich quick, but they offer a guaranteed return and your money is super safe, insured by the FDIC. It's all about peace of mind, right? But hey, here's another thought. Sometimes the best investment you can make isn't in the stock market or a savings account, but in yourself. Seriously, that $100 could be the down payment on a life-changing course, a certification that boosts your career, or even just a really insightful book that opens up new opportunities. Remember, knowledge is power, and investing in yourself always pays off in the long run. So yeah, $100 might not seem like much, but trust me, it's more than enough to start building a brighter financial future. It's all about making smart choices and taking that first step. Okay, so you've got $1,000 ready to invest. That's fantastic. Now we're talking some serious investing power. With $1,000, you've got more room to diversify your portfolio and start exploring some slightly more advanced strategies. But don't worry, we're still keeping it simple and effective. First things first, stick with what works. Index funds and ETFs tracking the S&P 500 or the total stock market are still your best friends. Think of these as the rock-solid foundation of your portfolio. We're talking about investments like the Vanguard Total Stock Market ETF, VTI, which gives you exposure to the entire US stock market, or sticking with the trusty S&P 500 ETFs like SPY or IVV. Now instead of dropping the whole $1,000 at once, let's get strategic, my friends. This is where dollar cost averaging comes in. It's a fancy way of saying invest consistently over time. So instead of buying all at once, you invest, say, $100 or $200 each month. This helps you ride out those market ups and downs and potentially buy more shares when prices are lower. It's a long game, people. Now if you're looking for a little more automation and guidance, I highly recommend checking out platforms like Wealthfront, Betterment, or SoFi. These are what we call robo-advisors. You basically answer a few questions about your financial goals and risk tolerance, and then their algorithms take over, building and managing a diversified portfolio for you. They even rebalance it automatically so you don't have to lift a finger. Pretty cool, right? But hey, maybe you're thinking, I want to get into real estate, but I don't have enough for a down payment on a property. Totally understandable. Well, guess what? You can still get exposure to the real estate market without buying physical property. How? REITs, baby. REITs, or real estate investment trusts, are companies that own and operate income-producing real estate like shopping malls, apartment buildings, and office spaces. You can invest in REITs through ETFs like BNQ, and they're a great way to earn dividends from the real estate market without the hassle of being a landlord. Remember, with $1,000, you've got options. You can build a solid foundation, diversify your investments, and even dip your toes into real estate. The key is to stay informed, make smart choices, and stay consistent with your investing. Alright, we're in the big leagues now. With $10,000, you've got serious investing power and the flexibility to build a well-rounded portfolio that can weather any storm. We're talking about diversification on steroids and tapping into even more advanced strategies. Get ready to level up your investing game, people. First things first, let's talk asset allocation. This is just a fancy way of saying, how are you going to divide your money across different asset classes? A good starting point is the classic 80-20 rule: 80% in stocks for growth, and 20% in bonds for stability. But hey, we're not stopping there. We're going to break it down even further. Let's aim for something like this. 40% in index funds and ETFs for broad market exposure, 20% in dividend-paying stocks for steady income and potential capital appreciation, and 20% in REITs or real estate crowdfunding for continued exposure to the real estate market. Now that leaves us with 10 to 20% to play with. This is where things get exciting. This is your growth or sector allocation. Think about investing in industries you're passionate about or believe in for the long haul, like technology, clean energy, or healthcare. You can invest in individual stocks, but remember, with great power comes great responsibility. Do your research, understand the companies you're investing in, and don't put all your eggs in one basket. But hey, maybe you're thinking, I want something a little more stable, something that can protect my money from inflation. I hear you. That's where government bonds like I-bonds come in. These bonds adjust their interest rates with inflation, so your money is protected from losing value. Now, for those of you feeling a little adventurous, you could also consider allocating a small portion, like 5 to 10%, to alternative investments like cryptocurrencies or peer-to-peer lending. Crypto, like Bitcoin or Ethereum, can offer massive potential returns, but it's also incredibly volatile. Peer-to-peer lending lets you lend money directly to borrowers, cutting out the banks and potentially earning higher interest rates. But again, these are higher risk investments, so only invest what you can afford to lose. Remember, with $10,000, you've got the power to build a truly diversified portfolio that aligns with your financial goals and risk tolerance. You can invest in established markets, explore new opportunities, and set yourself up for long-term financial success. Alright, before we wrap things up, let's talk about the golden rules of investing, the principles that hold true whether you're starting with $100 or $10 million. These are the timeless truths that will guide you on your journey to financial freedom. Rule number 1, start now. Seriously, the best time to plant a tree was 20 years ago, but the second best time is today. The magic of compound interest is on your side, and the sooner you start, the more time your money has to grow exponentially. Don't wait for the perfect time to invest because guess what? It doesn't exist. Start small, start today, and let time work its magic. Rule number 2, be consistent. Investing isn't a sprint, it's a marathon. It's not about timing the market perfectly, it's about time in the market. Commit to investing regularly, whether it's monthly, bi-weekly, or whatever works for you. Set up automatic contributions so you don't even have to think about it. Remember, consistency is key when it comes to building long-term wealth. Rule number 3, stay diversified. Don't put all your eggs in one basket. We've talked about this throughout the video, but it's worth repeating. Spread your money across different asset classes, industries, and even geographies. Diversification helps reduce your risk and protects you from market volatility. Remember, it's all about finding the right balance for your risk tolerance and financial goals. And finally, rule number 4, think long-term. Building wealth takes time, patience, and discipline. Don't get discouraged by short-term market fluctuations or expect to get rich quick. Focus on the long game, stay the course, and remember why you started investing in the first place. It's about achieving your financial goals, securing your future, and living life on your own terms. So be patient, my friends, and let your money grow slowly but surely. Remember, the greatest wealth is built over time, brick by brick, dollar by dollar. So whether you've got $100 or $10,000, now you know exactly how to put it to work. Let your money grow, because the best time to invest is yesterday, and the second best time is right now. Comment below and let me know. What amount are you starting with? I'm excited to see where you're starting from and cheer you on along the way. And don't forget to subscribe for more investing tips every week. Hit that notification bell so you never miss an upload. Thanks for watching, and remember, the journey to financial freedom starts today.